Hey traders, Shane from GMT Futures and FX. I'm going to take you through our MACD FIB Trader. This is one of the trading systems that we run on as part of our GMT portfolio of systems. We're going to have a look at our setups for the MACD FIB Trader. So we're going to start with the buy setup. So this is the system entry requirements for our buy setup. Now the first thing that we need to look at or understand is that the trader, that's you determine the minimum move that this system needs to have before it potentially takes a trade. So I'm going to go to the charts here in a minute, but basically step one is, well, the first thing is you determine the minimum move that the market needs to have before it starts looking at setting up a trade. Price needs to touch our upper or lower Bollinger Bands, and this shows volatility. I'm going to explain that in a little bit more detail. We need to have our pivots print a low then a high, and this gives us a point at which we can draw our Fibonacci lines. So if you've never used the FIB Trader before, I think you're going to enjoy this video because we're going to walk you through step by step how you set up the buy signal and how you select and go into those trades. So let's have a look at our charts now and basically just go through each one of those points so we've got a really good idea of exactly what we're talking about. So I've got the DAX up on our screen. This is on a 177 tick chart. Now the reason why I've pulled the DAX up is because it's a good market because it offers lots of volatility. So this is generally a good market to look at and potentially watch because it moves so well. So let's go through some of the things I have on the charts at the moment. I've got our window here, our data window. Now that's just a feature within TradeStation. You click on data window and that will come up on your screen. The indicators that I've got loaded up here, and we'll just go through those. I have the GMT Fib plotter, so that's plotting our Fib numbers. These are the coloured lines here that you see. I'm going to go through those in a bit more detail in a minute. I've got the GMT MACD Bollinger Band, so that's our Bollinger Band down the bottom. This part here in this bottom section of our chart is showing the Bollinger Bands. Now no doubt you would have gone through the Bollinger Band training, the GMT MACD Bollinger Band training, but just quickly, it has a zero line. Anything above the zero is showing bullish momentum, anything below the zero is bearish momentum. We have our MACD line and we also have our Bollinger Band. So as you know from your training on the Bollinger Bands, that when the Bollinger Bands squeeze, it shows as a lack of volatility. When the Bollinger Bands widen or expand, it shows that the market is increasing in volatility or energy, we like to call it as well. So anytime those Bollinger Bands are starting to spread or expand, it's showing that the price is starting to move and break out. And the MACD just helps by plotting the MACD, which are these green and red dots on there. It just shows you basically where the MACD is as far as momentum, because the MACD tracks our momentum. Obviously if it's below the zero line, we've got bearish momentum. If it's above, we've got bullish momentum. And that's a good example here when we see the Bollinger Bands open up and we see price just start moving above that midline of the Bollinger Bands and also then above the zero line, showing that bullish momentum. So let's have a look at what else is on our charts. We have our pivots. So as you can see here, this is our pivot low and that's our pivot high there. So anytime you are looking at your charts, remember that when the first statement I made in that training was that the trader nominates the minimum move that the market must have before this system works. So what that effectively means is that you get to nominate how much of a move you want to see in the market you're trading before this trading strategy even starts to work. Because the reason for that is that we don't want to, this system is designed to basically take low risk, high reward setups. So it's really as simple as looking at kind of a point A, point B and point C, and then where does price go then. So with our Fib lines, we're looking at, say, point A. We need to have a starting point in our trade, and that needs to have that's a pivot low. There would be our pivot high. So there's B, our pivot high. Then we get what we call the pullback. So this is what we're looking for. This kind of C, A, B, C is what we're looking for. We have price run up, we get a pivot high, which is marked with our red dots. Then we have price come down. There's our lowest pivot low there, which is C. And then what we're looking for is we're looking for a very low risk, high reward setup. So we want to basically get in here on this retracement of, because remember that the distance between A and B is measured. So let's measure that in our move here, and we've got 57 points. So basically what we're looking to do is we're looking to take a percentage of this move back down, and that's 31.6, and we're looking to get in on this trade here once we get a confirmation that price is turning. So the pivot low comes in and we're getting some bullish momentum there. Now you can see that very quickly, based on our Bollinger Bands, our Bollinger Bands tell us that that basically we've lost our bearish momentum and we're starting to turn bullish because our dots have gone green. So at this point here, we're getting a bit of an indication that we've got a bullish momentum and we're starting to cross that zero line. So this is why we like using this FIB Trader strategy, because with Fibonacci numbers and with Fibonacci retracement, what we're looking for is, we know that, so traders, for those of you who are unfamiliar, obviously the Fibonacci numbers, they're very popular, they're used widely in trading, and they're a series of numbers that correspond to a mathematical principle known commonly as the golden ratio. So Fibonacci numbers were introduced way back in 12,002 by Leonardo of Pisa, also known as Leonardo Fibonacci. The Fibonacci numbers are said to appear throughout the natural world. So basically in things like branches of trees, pineapples, structures of pine cones. So you'll see these Fibonacci sequences and patterns throughout the natural world, and they're usually displayed on the same chart as price bars. So for example, what we're going to do is we're going to have a look at how our Fibonacci numbers work within a trading environment, because this sequence of numbers are very repetitive and they appear commonly in trading, and particularly in the forex markets. They're widely used in the forex markets. They almost become a self-fulfilling prophecy when we start looking at specific trading charts and specific key areas or Fibonacci levels. And what they do is they help us as traders to identify where there are potential levels of support and resistance, because these Fibonacci numbers generally come up very commonly in those areas of support resistance. So the Fibonacci numbers are a series of numbers where the next number is the sum of the previous two numbers. So it's very easy to work out the sequence then. But let's have a look at it from a trading perspective, because Fibonacci numbers also have a relationship with non-Fibonacci trading systems such as Elliott Wave. But I'm going to show you how we're going to use those Fibonacci numbers in this strategy. So commonly on the charts, as you'll see tonight, or as you'll see today, you need a point A and a point B. That you need your starting point, ending point, track your Fibonacci levels. So what we do is we find our point A and point B, and then our point C is where we look at as what we call our retracement level. So when we post up our Fibonacci levels, we're looking for that retracement level, and they're called zones. Now the common zones, the Fibonacci levels, you've got 23.6, 38.2, 50%, 61.8, 76.4, and then obviously you've got your 100% level. So we're looking for one of these zones for price to stop at one of these zones, and they act as I mentioned before, support resistance. So you can see here that price goes up to our highest point, pulls back to our kind of pivot low there, and then that is basically as far as price goes. So it hits that 50% level, and that's a very common thing for some markets, for many markets. That 50% level is very strong. There's certain markets that will have certain levels that hold really well, and for the DAX, 50% you'll see it commonly used. But as I mentioned before, the trader needs to select the minimum move we draw the Fibonacci levels from, so point A to point B, and then we're looking for that retracement. And then obviously our entry point is to get in when we see price starting to turn back in our favor, so back towards that B level. Now your target may be the previous high, it may be 100% of this, it may be 100% of that that previous move, extend it out so you have a Fibonacci extension, so you're measuring that distance there, which is 57.3 points, and that would potentially be your, that might be your target there. And so and that may be your target there. Obviously it doesn't go anywhere near that, but this is an example of what we mean by Fibonacci. Now we're going to go back to our charts now that we've just done a bit of an explanation on that, and remember that we're using this MACD Bollinger Band as our entry point. So we need to just scoot back to where we were before. Alright, so the comment I made before was that the trader nominates, so we'll just minimize that a little bit. So the trader nominates the move. So anytime you're tracking a system like this where you want small risk, large reward, you want to see a fairly big move and then price pullback, and then obviously looking to take that entry point. So in this instance here, I've basically marked up my fib zones. We've already said that these fib zones are a sequence of numbers that repeat fairly consistently in the market, potentially offer up areas of support resistance. So you can see them: 23.6, 38.2, 50, 61.8 and 76.4. They're our levels. Now they're what we call our fib zones. Now we've had our minimum move on the DAX. So I said I want a move at least 33 points. That's the move that I want to have before I look at taking a trade. So I've basically got my pivot low. Now the pivot high, pivot low is what tells us when we've got our minimum move. So there's the A pivot low, and there's our B pivot high, and we're looking for our C. Now remember, our C is our retracement, and it needs to fall within one of these zones. Once it falls within one of these zones and prints a pivot low, then we're looking for a break of that the previous high of that candle. So there's a number of ways we can get in. I'm going to go through those now, but basically as soon as this sets up here, our pivot low, then we're looking for an entry point. Now our entry points are very simple. We can get in a number of ways, and I'll just go through those now. So before we go into our entry points, we get to nominate our pivots as well. So when you're looking at your system and you're deciding what kind of a pivot am I going to use, you're nominating the pivot based on the speed at which you want the pivots to print. If you've got a lower pivot, they're going to print more frequently. If you've got a higher pivot, they're going to print obviously less frequently. So we want kind of a middle of the range. 3 isn't too bad. I personally prefer 5. So I'm looking at these pivots. I'm pretty happy that you can decide what kind of a pivot formation you want, whether you want them a bit faster or a bit slower. I've got a pivot high of 3 and a pivot low of 5. I'm pretty happy with that. Normally we have them the same, 5 and 5, 3 and 3. For this purpose I've got them slightly split, but this is basically dictating where my pivots will print. So once my pivot prints, because you're nominating your pivot swings and you're nominating the minimum move, once you've got that, will give you your A, B, C setup. And once we have our C setup, we're looking for trade entry, aren't we? We've decided that we're going in basically on a price touch of 38.2 or in that zone. So as long as the move comes back to that zone between 23.6 and 38.2, we're taking this trade. So this is the area, our sweet spot. As long as it as long as it trades within that area, we're going to take the trade. So it has done that. Now we've got to look at our entry. How are we getting into this potential trade? Let's have a look at our entry potential set. Now, an important point to make here is that if price does not come back to one of these levels, 23, 38, 50, 61.8, if it doesn't hit one of these levels, then it's going to look for the next swing high, which would be up here, and then it's going to draw its retracer. It's going to have its B retracement, B and C retracement from this value here. So it's always looking for price to come back. So that's going to get bigger and bigger, obviously, that move. Now obviously it's come back and hit the level 38.2. So we're looking for our setup now. Once price retraces into the zone, the trader has the option to select all tradable zones or only certain zones as possible entry options. So you can basically turn all of these zones on and be looking for a retracement on any of these zones here, or you can just have a specific zone that you're looking to trade off. In this example, we're looking for the 38.2 zone. We're in there. Great, we're looking for the trade setup. Now, the other thing that we're doing is we're looking for our entry confirmation. So once we've traded into the zone, we're partially ready to take the trade, so we've got our setup. All we need to do now is get our confirmation. So our buy confirmation setup comes. There's two ways we can get into this trade. So the first one is very, very easy and very simple. As soon as we get into this zone and we hit that area, then we would take the trade based on our MACD Bollinger Band dots turning green. Well, they've already turned green, so they're already green. So once we trade into this area, we are taking this trade. So as soon as price falls in here, we're basically in the trade. So traders, just to recap, we need price to move back into this zone between 23.6 and 38.2. That's our zone that we're looking for the trade. Once we close in that area and we've got our green dots on our MACD, so our MACD needs to confirm that we've got our green dots for a bullish entry or a long entry, then we can take this trade. Now, then that's your MACD entry, and the target really depends on the trader. You can select a fixed target that you want to go for. It may be 2 to 1, 3 to 1, 5 to 1 on your initial stop. You might run a trailing stop where you're using either previous levels of the pivot lows here. So we'll go through in detail the different stop methods, but obviously with our other strategies we've got the ability to take a fixed target or the ability to run a trailing stop. So you've got either option